Heya Cryptozens, welcome back to the Crypto Overnighter. My name is Nikodemus and we do crypto news analysis nightly at 10 p.m. And keep in mind, none of this should be considered financial advice. And it's Thursday, March 9th, 2023. And writing this part almost felt like a eulogy. Silvergate Bank will close down voluntarily and liquidate its assets. The bank faced criticism after disclosing a week ago that it would need to postpone filing its annual 10-K report because its independent auditors and the accounting firm questioned its numbers. In an announcement on Wednesday, Silvergate stated that it had retained Centerview Partners as a financial advisor, Kravitz, Swaine & Moore LLP as a legal firm, and Strategic Risk Associates for assistance with transition management. The company stated that all deposits would be fully refunded during the winding down process. Silvergate Corp announced that, considering recent developments in the industry and regulation, the best course of action is to orderly wind down and to orderly liquidate the bank. The plan includes the full repayment of all deposits, and the company is considering how to resolve claims and protect the value of its assets, including its proprietary technology and tax assets. The California Department of Financial Protection and Innovation regulates the firm. They said that they're keeping a watchful eye on the situation. Commissioner Hewlett said that the department is examining compliance with financial laws as well as safety and soundness obligations and collaborating with relevant federal counterparts. White House Press Secretary Karine Jean-Pierre said earlier this week that President Joe Biden would persist in urging Congress to take action on crypto-related issues. The Senate Banking Committee Chairman Sherrod Brown stated in a release that Silvergate Bank's winding down is a clear indication of what can happen when a bank depends too much on a high-risk and volatile sector such as cryptocurrencies. Brown expressed concern that when banks engage with crypto, it spreads risk throughout the financial system. This results in taxpayers and consumers bearing the brunt of the damage. To protect the financial system from the dangers of crypto, he is collaborating with his colleagues in Congress and financial regulators to create robust safeguards. It didn't help that last week, Silvergate revealed that it was facing investigations from bank regulators and the Department of Justice. That raised doubts about its ability to function as a going concern for the next year. And as a consequence, major crypto clients announced their decision to cut ties with the bank. The holding company's stock value plummeted by 58% in intraday trading to an all-time low of $5.72. That's a decrease of over $115 in the last year. The stock price dropped further after Wednesday's announcement during after-hours trading. Signature Bank, another bank friendly to the cryptocurrency industry, experienced a similar drop, with its stock value declining by roughly 5% in after-hours trading and dipping almost 10% before slightly bouncing back. Silvergate Bank obtained loans of roughly $4.3 billion from the Federal Home Loan Bank of San Francisco. That said, the FDIC should have been concerned about Silvergate's condition several months ago. Since 2013, Silvergate has been offering banking services to crypto businesses and introduced its own settlement system, the Silvergate Exchange Network. However, on Friday, Silvergate announced that it had suspended the SEN. When Silvergate filed to go public in November of 2018, it disclosed that it had around 500 crypto clients. In 2019, it completed its IPO and traded on the New York Stock Exchange, and at that time, the bank claimed to have more than 750 crypto clients. Silvergate is going through a voluntary liquidation, and that means that Silvergate is not going to be on the FDIC's failed bank list. It does appear to be the first significant bank collapse since October of 2020 and likely the largest bank to fail since 2009. In related news, Marathon Digital Holdings announced that it had paid off its term loan and credit facilities with Silvergate Bank. The repayment helped to decrease the company's debt by $50 million. Marathon's chief financial officer, Hugh Gallagher, stated that they've been working towards strengthening their balance sheet by increasing their cash and Bitcoin holdings. Gallagher also said that the company decided to eliminate both the term loan and revolving line of credit facilities because it was in the company's best interest given their current cash position. The dates for Mt. Gox creditors' registration have been pushed back by a month. Creditors can now file claims until April 6th instead of March 10th. The distribution deadline has also been moved back by a month. Distribution of assets will now begin from October 31st instead of September 30th. The official document gave reasons for the change in deadlines. These included the progress made by rehabilitation creditors. The creditors have different options for receiving compensation, such as a lump sum payment, bank remittance, or using a fund transfer service provider or cryptocurrency exchange. Mt. Gox suffered a major hack back in 2014. The incident caused losses for the creditors, and these creditors have been waiting for years to be made whole. And this was a big deal at the time, because when the hack happened, Mt. Gox accounted for more than 70% of Bitcoin transactions. After the theft, thousands of Bitcoin were stolen, and the exchange filed for bankruptcy. In February, the biggest creditor of Mt. Gox opted for an early payout in Bitcoin rather than waiting longer for a larger payment after a legal battle. This early payout means that creditors would receive about 90% of the due amount. The creditor chose to be paid in Bitcoin, so the bankruptcy trustee doesn't have to sell tokens to get fiat funds for the repayment. As a result of the extension, other creditors now have an extra month to decide whether to take the lesser amount immediately or to wait for another 9 years to receive the full amount. For a while now, the payout to Mt. Gox creditors has been a topic of interest. This is especially so because the value of Bitcoin has increased significantly since the exchange went bankrupt. There have been several concerns about how the market could be affected by the creditors if they decided to sell their holdings. Bloomberg reports that the most prominent Mt. Gox creditors do not plan to sell their Bitcoin. Now, frankly, I think the hand-wringing over the release of the Mt. Gox Bitcoin is just a bit much. Even if they open up and they hand out all those Bitcoin, and every single one of those Bitcoin hits the market, that's a drop in the bucket compared to the total liquidity in the Bitcoin market. Bitcoin's tough. It can take it. Don't sweat the Mt. Gox stuff. The phrase, a drop in the bucket, comes to mind. One drop in a very big bucket. Missouri state legislators have voted in favor of amending House Bill 764 on March 7th. Introduced in January, it aims to define the language used in relation to cryptocurrency miners. The amendments also seek to protect the right to operate without discrimination, especially from the energy sector. The newly added sections to the bill are designed to establish the legal framework for handling digital assets in the state. This is a particular emphasis on cryptocurrency mining. The amendments address various topics, including energy consumption and sound pollution. The document differentiates between mining businesses and home miners and provides protection to both. Mining businesses are defined as those who operate several computers at a single location and consume more than 1 megawatt of electricity. According to the bill, no political authority can force them to stop their operations as long as they are in an area zoned for industrial use. Now, home digital asset mining, on the other hand, is defined as taking place in residential areas. Both categories of miners are protected from discriminatory rates for energy, meaning they cannot be charged more than other customers. Similarly, home cryptocurrency mining cannot be subject to discriminatory orders regarding noise pollution. The bill also requires any jurisdiction that wishes to change zoning rules to provide adequate notice and to go through an appeal process. Moreover, the Digital Asset Mining Protection Act explicitly states that home digital asset mining does not make individuals money transmitters. Now, while there have been criticisms of federal lawmakers' inactivity in the digital asset space, several states have been more proactive. On February 23rd, Montana passed a bill very similar to the one that just recently passed in Missouri. The FTX exchange is facing several proposed class action lawsuits from investors. A federal judge has declined to combine these lawsuits. The judge explained that the exchange and its defendants haven't had a chance to defend themselves yet. To be clear, it was the plaintiffs that requested consolidation. That said, none of the defendants opposed the motion. The judge noted that not all defendants had responded yet. The order stated that the plaintiffs did not provide evidence of meeting with defendants or confirming their stance on consolidation. Julie Papadakis, Michael Elliott Jessup, Stephen Pierce, Elliot Lamb, and Russell Hawkins filed cases against former FTX CEO Sam Bankman-Fried and others. They also accused the defendants of misappropriating assets. The plaintiffs are targeting Bankman-Fried, but the cases also involve outside auditors and promoters of the exchange. The judge noted that since there are multiple defendants involved, it's unnecessary to consolidate the cases before hearing from all parties involved. The defendants have not yet had a chance to speak, so the judge believes it would be premature to appoint them interim class counsel before consolidation. And here's the salient point. The order states that it is important to allow the defendants to be heard before making any decisions. In somewhat related news, Sam's lawyers have suggested that they might need to postpone his criminal trial set for October. In a letter dated March 8th, the lawyers stated that they're not currently requesting a change in the trial date, but it may become necessary. They said that they're waiting for a large amount of evidence to be delivered to them. On March 9th, Swift announced that it had successful results in a pilot test, and this test was about connecting various CDBCs. For 12 weeks, Swift conducted a test where they simulated approximately 5,000 transactions between two blockchain networks and existing fiat payment systems. Over 18 financial institutions worldwide joined the study. These included the Royal Bank of Canada, Banque de France, Société Générale, the Monetary Authority of Singapore, HSBC, Deutsche Bundesbank, NatWest, and more. According to Swift, the sandbox testing revealed that their experimental interlinking solution can fulfill the interoperability requirements of central and commercial banks for CDBCs. So what they're saying is that CDBCs can be utilized effectively in cross-border payments. Now, Swift also mentioned that there was a strong degree of alignment among the participants regarding how CBDCs may operate in the future. For the upcoming phase, Swift intends to conduct another stage of its CBDC sandbox and to enhance its CBDC interlinking solution into a beta version for payments. Swift anticipates that 24% of central banks will create a CBDC solution in the next few years. Currently, over 110 central banks worldwide are examining the use cases of CDBCs. Louis Sun, the global head of domestic and emerging payments at HSBC, remarked that interoperability is crucial for CDBCs to fulfill their potential in enabling real-time cross-border payments. Sun also warned that with the increasing interest in CBDCs, there is also a growing risk of fragmentation due to the variety of technologies and standards being tested. And remember what I've said in the past. Pro-crypto folks should be watching the pro-CDBC folks. Remember what problems they're facing. See what direction they're going and get there first and solve those problems first. I think that's the best bet for crypto to win. Do it better first. The National Bank of Ukraine has a mixed view on cryptocurrencies like Bitcoin. This is because of the country's ongoing war. The bank sees both good and bad in virtual assets, but it is more doubtful about crypto due to economic and financial problems caused by the invasion. Now, this is according to the National Bank of Ukraine's press office. And to be clear, this is their central bank. It's not the people, it's not the government, it's the opinion of the central bankers. Now, starting from April of 2022, the central bank banned citizens from buying cryptocurrencies like Bitcoin using the national currency. The bank allowed such purchases only through foreign currency accounts. To limit the amount of crypto purchases, the central bank set a monthly cap. This restricts Ukrainians from buying crypto for more than $3,300 US per month. The restrictions also apply to cross-border peer-to-peer transactions. According to a press officer for the central bank, the administrative restrictions on cryptocurrency operations in Ukraine are temporary. The bank stated that they would gradually ease the limits as the economy and financial market of the Ukraine get better. They are participating in creating a transparent and clear regulatory system. They believe that this will help develop a fair and effective circulation of virtual assets. The central bank said that they had to impose the restrictions to stabilize the foreign exchange market and maintain macro financial stability in Ukraine. According to a representative, transactions involving cryptocurrencies could help bypass currency regulations. This could lead to unproductive capital outflow from the country. The outflow of capital can cause risks to the macro financial stability of Ukraine. The central bank also sees risks in national currency substitution and the emergence of parallel money circulation in Ukraine. The risks are especially high during the war and beyond their control. According to the bank's spokesperson, this can be a threat to monetary sovereignty. Despite being cautious about crypto during the war, the central bank said that it is still optimistic about technological advances related to virtual assets. The bank believes that crypto holds many promises, such as better access to financial services, competition in the payment services field, investment attraction, crypto donations, and others. Therefore, the bank supports the idea of establishing civilized conditions for the development of the virtual assets market in Ukraine, according to a press release. Those recent comments came shortly after the commissioner of Ukraine's National Commission on Securities and Stock Market stated that the war had not affected the authorities' regulatory stance. He said Ukraine is following the European Union's digital asset laws. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe. Leave a rating or a review. And in the meantime, we'll see you tomorrow night.